question was, it would make more sense to me if I was rolling up mobile home parks and then start rolling through that and then contact you maybe at the end of this year, middle of next year, because mine would be I'm not looking to go through an IPO. I'm looking to start out with this, get it built up, roll up a little bit, and then switch out into a industry that might take a little more capital to get started off the ground floor.
Gotcha.
So my input, my thought line was, if you're building up in the Midwest, because it seems like you're rolling through Nebraska and Kansas as most of your focus, if I started up here in Iowa, it seems to me like my exit strategy would be more in some way to be rolled up into yours down the line. Does that make sense?
Makes sense. We'd be interested. Of course,
yeah.
You wouldn't want to have one buyer, but yeah. Yeah.
No, you know what I'm saying, though.
Yep, I do.
I was looking at my exit strategy being maybe a little more close on the horizon, and I'm not, tying anything to you today, but you know how it is. You try to look at your exit strategy as well at the same time that you're getting it going.
100%.
And so I just didn't know if the exit strategy in that route would be something where maybe I contact you every few months if it's moving forward and see where we're at, and then see where you guys are at as well, and try to stay in touch. But
cool. Yeah, and let me share a couple of things in regards to an exit in the mobile home park industry, whether it's us or otherwise, which I appreciate the consideration, but candidly, you'd be wise to just position yourself to be enticing, whether it's us that would buy you, another group that would buy you, et cetera, et cetera. And candidly, especially if you're looking for kind of a mid-size exit, it sounds like you're kind of looking to do a 1 or 2 year sprint exit and then take that capital and go do something, maybe cyber, right? So if you're going to sell to, let's say, us or somebody kind of like us that's only really 1 or 2 or 3 steps ahead of you, they're a little bit more flexible on tenant-owned home versus park-owned home. You could probably sell a little portfolio of maybe 2 or 3 holdings, or maybe 200 or 300 lots at maybe 12 or 13 times earnings. So, I mean, the arbitrage earnings-wise is way different than some of the other industries maybe you've heard of. So, yeah, you can make money doing it, dude, and yeah, I think you have a good thesis. It seems like kind of a quick play, and yeah, I mean, the IPO thing, we've got a 10-year runway. We're thinking 10 years before we truly take off to that level. So, respect if you want to go do something, take the money and do something else. Absolutely.
The nice thing, man, is you're going to have more flexibility with a quick private sale than you will if you do an IPO. If it's a guy like me in 2 years that's buying you, I'm going to be a little less judgmental in what I'm buying than if you're literally going to float on a public stock exchange. There's a lot more eyeballs when you go an IPO direction versus if you do a $15 million exit in a private sale. So that's the nice thing about these 2, 3, 4 year exits. The multiples aren't the same, right? You may be able to sell in a private sale in this industry at 12 or 13 times earnings. If you do public, you do 22 plus times earnings. So that's the benefit of going the long game, but it's harder, it's longer, etc. So in a case like yours, man, take the money and run.